Where are interest rates headed? That's the million-dollar question that everyone wants to know. Whether you're buying a property or refinancing, you have an interest in the direction of interest rate because it affects your monthly payments. In fact, interest rates also affect things like house prices. And if you're following the media or you're following other YouTubers out there, there's a lot of people saying that interest rates are going to continue to rise, which is going to cause this pullback in home prices. And you've also got people talking about inflation, right? Inflation is going through the roof, and therefore the roof is going through the roof, and therefore interest rates have to rise in order to slow the growth of the economy. So decide which camp are you in, right? There's a lot of YouTubers out there that believe that inflation is a problem and therefore the Fed's got to raise interest rates, but at the same time they're talking about how poor the economy is doing and how it's all a facade and that, the housing market's going to crash. And you can't have it both ways. If you think the economy is doing well, things are going great, then yeah, you can likely see a prediction of higher interest rates. But if you think a lot of this is a facade and that it's being generated by stimulus money, the fact that people saved a lot of money in 2020 by being locked at home, in fact, savings were at an all-time high, and they're now just putting that money to use in the economy along with stimulus money, and that inflation is transitory, then you're probably in the camp that interest rates are likely going to stay low for the foreseeable future. In fact, interest rates have been in a downward trend since 1982. I've showed this chart many times over the last year. In fact, I've been telling you that I believe interest rates will stay low because I don't believe we're in a position as an economy to start raising interest rates. I don't believe the foundation is there. I think a lot of what is happening in the economy is due to supply constraint issues, supply and demand issues with regards to housing, right? I mean, this takes us all the way back to the last housing crash when they put restrictions on home builders, right? There was a huge surplus of inventory back then. Restrictions were put on home builders, and over the last 10 years, home builders have built less and less homes almost every single year. And then we come into the pandemic, interest rates go lower. You've got a year's worth of buyers in 2020 that didn't purchase, that kind of got thrown into the 2021 market along with the buyers that were coming into the 2021 market. And so you have this huge amount of demand, very low supply, and it caused house prices to go through the roof. And a lot of that was being fueled by low interest rates. At the same time, you have used cars going crazy, you had lumber prices going crazy, just all of these issues that were due to low supply. Now, a lot of these things are going to work themselves out, right? More inventory is eventually going to come to the market with regards to housing. Lumber prices, we've already seen lumber prices correct. They've come off the highs. They're almost back to where they were at the start of 2020. Used cars, microchips, that sort of thing, that's going to take some time for it to correct itself. But just because things moderate doesn't necessarily mean that the economy is doing poor, and just because things are going crazy doesn't necessarily mean the economy is doing well. In fact, the Fed has come out and said that they're likely going to keep interest rates low through 2023. Now, at the last FOMC meeting, there were a couple people that have changed their stance on interest rates, saying that they thought they should raise them sooner, looking at 2022. But the Fed is holding its stance, right? They don't want to start raising rates until they know the economy is stable. And part of them knowing that the economy is stable is employment, right? They want to get employment back to where it was pre-pandemic. And if you've been out looking around, if you've been out of your house at all, almost every single store that I go to has a help wanted sign. They're trying to find good workers out there. They're trying to find people that actually want to work because there's still a lot of stimulus money floating around the economy. Unemployment, that additional unemployment is still out there until, I believe, September. And so for the next couple of months, nothing is really going to change with the economy as a whole, right? I mean, we've seen prices rise, we've seen prices pull back, and that trend is likely going to continue in some of these areas, right? Home prices are probably going to move sideways to up because supply isn't going to correct itself in a year. It's going to take time for supply to correct itself. But things like cars and lumber and that sort of thing, it's easier to correct once they get out of the bottleneck. Homes, it takes a lot longer to build, takes land, it takes a process. It's not quite as easy. So for that reason, I think you're going to see interest rates stay low. Now, don't use this information to try to pick the top or a bottom with regards to buying a house or refinancing. If the payment makes sense to you now, I would tell you to do it, right? Don't sit there thinking the interest rates are going to go lower and you're going to wait, because a lot of people get in that position and are wrong, right? Could I be wrong? Absolutely. But I think if you're in the camp that the economy isn't doing as well as it's probably portrayed, then why and how could they actually raise interest rates, right? Because the government actually services their own debt based on interest rates. So as interest rates go up, it costs them more money to service their own debt. And I personally don't believe, with all of the stimulus that's being printed out there, and all of the additional money that's being thrown at these various programs, that the government's in a position to pay more money to service their own debt. It doesn't make any sense. And therefore, I think interest rates are likely going to continue to stay low. Now, today, we actually saw a 0.25% drop in interest rates, which is pretty significant based on how much you're borrowing from a bank. So that 0.25%, along with the fact that Fannie Mae and Freddie Mac removed the adverse market fee last week, means that interest rates on refinancing just got considerably less expensive. So if you're considering refinancing, I would tell you to get a quote. Get a new quote. If you've been having conversations with lenders, get a new quote to see if it makes sense, right? Because that's almost 3/8 of a point difference in where things were last Thursday. Now, keep in mind, I've mentioned this before, I'm not a mortgage broker. I have no skin in the game. I get nothing out of telling you to talk to a mortgage professional, get multiple quotes, talk about refinancing, what have you. I'm here to merely to provide you information, guidance in order to help you get the best rate possible. So if you're considering refinancing, you need a good lender out there, reach out to me directly. I'm happy to put you in touch with somebody. There's a link in the description below. Happy to put you in touch with somebody that I know does a good job, regardless of where you're located. But the point here is to make sure you're getting quotes. You make sure you're not trying to pick the bottom, pick the top in interest rates, and just find a rate that makes sense. And if interest rates trend lower, then maybe you're in a position to refinance at that time. But the long and short of this is, I don't think interest rates are going to move very far, right? If they do go up, I don't think they're going to move up by more than 1/4, maybe 0.5% at most. And if they move down, you're probably not going to see more than 1/4 or 0.5%. I just think interest rates are going to move sideways as the economy continues to repair itself. As things get more stable with regards to the economy. Now, if we do see, another variant of the pandemic, the virus come out, the Delta variant that's floating around the internet, that could affect things in a negative way. If businesses start to shut down again, you could see additional stimulus. You could see interest rates trend down, right? Lower interest rates allow businesses to borrow more money, which helps stimulate the economy, which means that until you see businesses stable across the board, you're not likely to see interest rates go up, because it's going to cost these businesses more money, which is going to slow the growth of the economy. So the Fed is out there trying to continue to stimulate the economy, which is what they've done. And I don't see that changing until you see more stable foundation across the board. So that's my thoughts on interest rates. I don't see them going too far from here. But if you have additional questions for me, comments for me, do me a favor, leave them in the comment section below. And again, if you need a mortgage professional, whether it's for refinancing and or buying a home, reach out to me directly. I'm happy to put you in touch with someone. I get nothing out of it other than knowing that you're taken care of. But for now, I appreciate you taking the time to watch. I appreciate all the support. Hope to see you again soon. Have a great day. Bye-bye.